Well, I am kind of amazed that some of these businesses, Taco Bell, let's just call it on fire. I mean, to the point where you would think that there is no pandemic. How the heck is that possible?
Well, it certainly looks that way at the top line, but beneath the surface, there's a lot of work going on with the Taco Bell team to pivot the business in this environment and meet consumers' new needs wherever they need them. So we've increased our delivery business at Taco Bell. Obviously, with dining rooms closed, our drive-thrus have become even more critical. And the really big story coming out of Q3 is obviously around tech. You saw that our digital sales at Yum were up $1 billion in the quarter for the second consecutive quarter. Never has that been more true than a brand like Taco Bell, where they are embracing delivery, rolling out a loyalty program, improvements to their app, and customers are loving it.
Why don't you talk about what the Grub stake did? Because I believe that your company, look, it was everybody's first pandemic. Not that you saw a pandemic coming, but it's really changed the way that people eat, and you were well ahead of the game.
Yeah, we thought it was important as aggregators emerged to form a partnership, get a board seat at a company like Grub where we could understand what's going on the front lines with aggregators. And that's how that worked out. Now, as you saw, we divested of that stake and actually made a little profit on it. But most importantly, we really understand what's going on in the aggregator space, have formed good partnerships with a number of different aggregator partners, and that's helping fuel the business. But it's not just aggregator driven, obviously. This is all about the dine-in business, drying up in this environment and how we've pivoted all around the world to delivery, drive-through, carry-out, and really, you saw in the numbers, our system sales grew in the quarter, our profit was up, and our sales at stores that are open, same-store sales, were flat for the quarter. An amazing pivot when you think we had about over $4 billion of sales typically in dine-in during a quarter like this, and that number, we've lost about $3 billion of it, but been able to make all of it up.
Hey, David, we keep seeing these renderings of the fast food restaurant of the future where it's walk-up service, it's multiple lane drive-throughs. Can you give investors a sense of what kind of CapEx is backing that up, and what's the calendar on renovating or adding new restaurants that would look like that?
Yeah, the asset base is another example of, as a lot of people talk about in this environment, trends in the industry accelerating. We've been moving to a more of an off-premise model over time all around the world. As you go to more of an off-premise model, that presents opportunities in the asset base where you can shrink the footprint, do more than one drive-through lane. We have some stores for KFC, for example, in Australia that have 5 drive-through lanes that we rolled out over a year ago. So we've been on this trend for a while, working on new asset formats. They'll be smaller, they'll be more designed for delivery and for contactless curbside pickup, which is a big part of this. With dollars tight and customers wanting to maximize their spending money, a great option is to just do contactless curbside pickup at our restaurants, and we're going to design assets to do that. So that's going to reduce the CapEx for our franchisees and produce stronger economic returns for them, and we think it'll fuel unit development around the world.
Shepard Smith here. Thanks for watching CNBC on YouTube.